This is Eric Muadhi, Muadhi.com. It's about 50 minutes after the market opened. The Dow has been trading between negative and positive for a while. Currently trading up 20 points, 18 points higher for the day. I see Prudential is making a new high. Morgan Stanley is moving to a new high. Wachovia, and basically by extension, even I see Wells Fargo. All these financial stocks are moving higher. Based on what I see, I want to take the opposite side of this trade. Now, of course, look, either way, you're going to be risking your money for a trade. Always for a trade, because remember, tomorrow we have options expiration, and I really don't know how that's usually something does happen. Either you get a big move in one direction, or you get a snapback reversal. So to be very honest, I'm not going to predict that. I don't know which way we are going to go, but I'm leaning towards a market sell-off today. And in this video, I'm going to try and show you why you should kind of lean towards that, even though the market and some of the financials are moving to new highs as I make this video. Now let's look at the charts. I'm going to make this short so we can move on here and try and make some trades. Yesterday we tried to move above this higher range of this triangle here. We failed, and that made some people sell, and the market did give back some of its gains towards the close, down 100 points on the Dow. So that's what happened here. We still remain in this triangle, so it's anyone's guess whether this market eventually breaks out or breaks down. And I don't know which way it's gonna go. But one of the things that I pointed out yesterday was this double top on the hourly chart, usually a reversal signal in the market. And one thing you can also watch going into the next couple of hours and into the next few days is if we break below 50 on the hourly chart and break below this blue line, which is a support line that also coincides with this low here, that's going to be a significant break in the market when we get that. And if we do, and I don't know which way we are going to go, I'm just leaning slightly right now on the bearish side for a trade. Yesterday I was leaning long for a trade as of late, I guess Monday, and now as of late yesterday I changed that to a net short position, and this market wants us to trade it, so we really have no choice. If you get anything above 15, 20, 25% in a day and a half, take your profits. Alright, this is a Dow 1 year daily. What I wanted to show is that we seem to be forming on the daily as of today's trade and last night's close some kind of a double top. But what's more significant to me in the here and the now in the short term is that the RSI is at 52.65. Any continued move lower in the market, anytime today, tomorrow, early next week, if we move below 50 after this double top, that's going to lead to a very big sell-off in the market for the day whenever that happens. And it could even be today, and I don't know. So that's what I'm looking at. Watch the 50 level and the relationship of where the RSI is to see whether we get a big sell-off in the market. One of the cues for this market wanting to rally is the ERY, triple bear ETF, three times a bear ETF, and I saw some kind of a short-term wedge breakout, very definitive. That tells us to lean towards going short. And also if I look at the hourly chart, the ERY, again, I see some kind of a breakout of this consolidation, psychological breakout, telling us we might lean towards the short side. That's probably where the highest degree of odds favor. And then you also look at the daily, the ERY again. It's just I picked one of the main instruments. We seem to be getting out of a set of a daily wedge or declining RSI. We seem to be moving out of that early. Now one way you can play this is